which we hope to get to become road trucks. So thank you, Rob.
Okay, well, I'll take that as a handover, Ben. You're certainly in a scratchy area for your audio. As Ben said, many of you also know that we were planning to have this as a dinner in Launceston, and I looked at the menu and I thought this is going to be good. And I also started planning this presentation. So I working backwards, probably about 3 weeks ago, and I was quite excited. It was a new paradigm for meat, and this was sort of my lead bit of a story. What a time to be in the red meat industry. And I'll still use the same headline, but it's almost for different reasons now. And so, but I still think, like I did back then, if I won Farm Lotto tomorrow and my first prize was 1,000 hectares, what would I do with it? And the short answer to the question and the lead into what we're going to talk about tonight is that I would choose to run sheep or cattle. It's red meat for the future. And tonight, I'm going to try and tell you why. Australian livestock industry over the term of my career has been one of great reward and great satisfaction. However, looking back is one thing, and while satisfying, it's what I see when I look ahead that really excites me. In the future, the good business, basics of good business will still apply, and certainly Ben and Jane and the team know all about that. And the future for producers will need that, and I'm looking back to what I wrote 3 weeks ago, and it's even more true now, will necessitate constant innovation, productivity improvements, new ideas, more expansion and greater scale, increasingly complex solutions and new ways of doing things. And then you overlay that with what we see as the increased demand globally for Australian beef, lamb and mutton, and the growing wealth in large sectors of the population influencing the price and demand. It's not hard to be really optimistic about the future of livestock. And so what it really means is that in the future, our product and our animals are going to be more highly sought after and potentially more profitable than ever before. Now, that was the narrative I was preparing tonight for 3 weeks ago, and how things have changed. But tonight, I want to talk to you about, certainly about COVID-19 and the impacts we see in that, with a lot of provisos and what ifs. But I want to also talk about the big drivers that's happening for our industry and what that means. Just a little bit of background for those who don't know what Mecardo does. It collects as much data as we possibly can. We puff our chest out and we say we've probably got, across all industries, more collective data than anyone else outside of the government. But it's not that data alone is not where the value is. The data, all it does is gives us a chance to make up the story and base the story on the data, because that's where the substance is. We all accept that Alan Cole has great data behind him, his nightly stories, and he explains to us what it means, but we don't question that. It's what he's telling us about the stories that what really matters. So we pride ourselves on this ability to understand the data, apply our experience, and then tell the story. And it helps when the story is upbeat, because then it's a pretty easy one to tell. So tonight I'm going to tell you a story. And oh, by the way, there's Fiona. And I don't know if anyone saw her on the drum tonight, but she continues to impress, I think, in leading us. But she allows us to use this quote that she made when she introduced us somewhere, that Mecardo are the guys who made market data sexy. Well, that's nice, but what we really think is that she's saying that we're able to make data into something that can help people make decisions. So tonight I'm going to tell you the story. I'm going to tell you the story that could become both the greatest challenge and the greatest opportunity broadacre agriculture has seen in our lifetime. There's the big stories to look at first. And Olivia said to me, who works for us out of our Sydney, I was going to say our Sydney office, but everyone's working out of their bedroom now by the look of it. Olivia said to me yesterday, we're in the Battle of the Black Swan events, and 2020 will be remembered for so many things coming out of left field. Now, everyone's talking about COVID-19, but there are other factors that remain and they'll exert influence on our markets in the future. So let's understand where we are by looking firstly at the macro. And you'll notice that I'm going to put up a number of things that have been impacting us for some time and will continue to impact into the future. And we'll talk about them all, perhaps not so much the China-US agreement. These are the big stories of recent times, and they all have varying impacts on the future of the red meat market. And I'll concentrate more on this varying impact as we go on. I just want to also note that we're not talking about, at the moment, we're talking about red meat, not beef, lamb or mutton. And the fact is that all of the red meat produced in Australia has or will to varying degrees be impacted by these big impacts. In relation to COVID-19, there's simply no way anyone is able to accurately take in all the variables that exist right now and predict with any certainty what's ahead. What we can do is outline all of the issues and describe, to the best of our ability, of course, what impact they will have individually on red meat in the future. And roughly this area could be classified as the known unknowns. And I think from within our team here at Mecardo, we think we're not bad at providing outlook based on this information, on the known unknowns, what's going to happen based on what we know. But this is where it gets a bit trickier right now, I think. So from there, we need to weigh up the relative importance of each of these impacts. This is where we get into the unknown unknowns, or as Donald Rumsfeld eloquently outlined. So be under no illusion that we will not at this time be able to appropriately assess all these. The best we can do is continue to follow the changing scene and presented as we're presented, and to reassess as things become clearer. The other factor that we'll talk about tonight is the drought and the subsequent rain. And obviously, we've already seen some of the impact on that. We'll talk about how that's going to contribute into the future. Let's just do a quick update on pigs. Why not? Seeing we're talking to beef and sheep producers. There's 800 million pigs in the world, or there were. There were also 440 million pigs in China. Now, pork in China is a pretty important thing. In 2018, each China consumer purchased 109 kilograms of pork. And just to put that in perspective, in Australia, our national beef consumption is 26 kilograms of beef per person. There's also, we all focus on China, but in this situation, China had the biggest pig herd by a mile. They had 50% of the world's stock. And they had more pigs than the next 43 countries combined, but 106 million other pigs were in the rest of Asia. And so what that means is that African swine fever has impacted countries representing 94% of the world pig herd. So in China, what that'll mean by the end of 2020 is they'll be down to 240 million. Now, on the surface, that's going to create a deficit of 25 million tonnes of protein, red meat protein, compared to what was consumed in 2018. Now, we know they will do something about it. So what they'll do is they'll up their beef production, they'll import more chickens, there'll be more beef imports, they'll produce more chickens, and pork imports will go up. But the remaining gap is still 16 million tonnes of red meat. And just to put that in perspective, the Australian beef production, the total Australian beef production is 2.3 million tonnes. And the Australian sheep production doesn't even get to 1 million tonnes, it's 0.7 million tonnes. So we know that China will recover. They're desperate to recover. And one of the ways they'll do that is they'll replace the backyard piggeries with large biosecure piggeries, and that will certainly get things back into shape in a reasonable time. And remembering pigs are pretty quick breeders. They have an average, in Australia, they have an average litter of about 11, and they have a gestation period of 3 months, 3 weeks, 3 days. I love saying that because it's one thing I remembered a long time ago, and I've even taught my grandkids that. So, but the population will lose some confidence in pork, and other meat products will benefit. So what happened in the first instance? The initial impact was that the authorities brought out a heap of frozen storage pork out of storage to satisfy demand, but it didn't stop a dramatic lift in price. As an aside, the total Australian pork production would supply China for 3 days. So the market jumped 167%, and that spilled over into all the other meat products as well. There was one other thing that probably not many people have heard about, and it probably won't get a run now with all the other news that's going around, but there was somewhere between 50 and 100 million chickens died when the first COVID-19 lockdowns happened in China, when staff were unable to get to feed them and look after them. So that sort of re-emphasises my earlier point of saying that there are so many variables in all this that it's going to be difficult to weigh up everything at once. If we thought they were going to replace some of the pigs by chickens, maybe not. So what did it mean for Australian meat exports? Well, the first thing is that beef exports went up 86%. Now, I want you to, and that's important, but if you look at that chart that I'm showing you here, you can see that for some time now, the increase in demand and exports to China had been growing. And so what happened was this African swine fever impact, or the deficit of 25 million tonnes of red meat protein, was just the fuel on the fire that was already burning. Similar story for mutton. Mutton exports are up 86% on the 5-year average. They're down. January was quite strong, but February was down. And I think we all know that the main reason for that is we had rain, and we probably started to run out of sheep to slaughter, and the numbers just aren't there. In terms of lamb exports are up 47%, and it's a strong signal to see a country come into a market, and I'll show you in a minute the long-term demand that China has had, but they've come in at a time when the price has been at very, very strong prices. So if you compare with what happened in the wool industry when China became the dominant force, they came in and dominated when prices were at their rock bottom. And it took the wool industry a long time to drag the market up because, China was used to paying low prices. Well, I guess the good thing for us is that they've come in at a time as a strong buyer when prices are very strong. This little slide here, I won't dwell on it too much, but it just re-emphasises the point that as incomes go up, so on the bottom scale there, GDP per person, so from 10,000 to 20,000, kilograms per person of red meat goes up the same. So you've got Australia and the US sitting up here where we're not going up at all. In fact, we're probably consuming a little less, but you've got these other countries that are actually coming through, China, Chile, they're all, Indonesia, they're all yet to see their real growth in consumption of red meat protein. So it was already started, and then the African swine fever was the little bit of kero that went onto the fire. There's also a group of people called millennials, and if you think of them, they're probably like our adult kids. They're pretty secure in their jobs. They were up until now. But in China, they're also very well connected with the world, and they're the people who are embracing Western diets. And just to put so we know in the US, there are, I think the total population in the US is about 329 million. In China, these millennials total 400 million. So we've got a huge market that's starting to get into the habit of consuming red meat. Let's talk about something that affects us a bit closer to home. We've now had a huge turnaround, of course, in much of the country. There's still areas that are desperately seeking rain, and I know we had someone on earlier tonight saying, looking at the storms going around and still getting frustrated. But by and large, we've had a massive turnaround in many of the stock and grain producing areas. Now, it's left us with a unique situation. Stock numbers are incredibly low, and the sheep flock is sitting at the level it was at about 1900, and cattle are at the lowest numbers since in the last 30 years. But at the same time, coming out of this drought, sheep and cattle prices are very high. For those who are around in the 70s and 80s in those droughts when we couldn't get rid of sheep and we were shooting old cows, this is a completely different situation. And it's tied up with the amount of effort and the success of developing export markets. So now when we have a big turnoff, the rest of the world hardly blinks and gobbles up our excess red meat protein. And one other thing that influences in the cattle market is that we have a very strong live export market. I think on average, we export about 12% of our turnoff. In the 2014-15 drought, the turnoff rate, the amount of cattle that were exported as a percentage of the turnoff rate jumped up to about 16 or 17%. So we've got that pressure valve that can take the volume without seeing markets collapse. What this means is that restocking is going to be difficult. Restocking is going to be really difficult, and it's going to be difficult for anybody who's been in the difficult situation of having to get rid of a lot of their stock. It'll mean that any ewe or cow capable of producing a lamb or a calf becomes more valuable than ever before. We're already seeing that, but I'll talk about how long we think this is going to last in a minute, but there's no doubt that that's going to be the case. So what are the impacts on recovery? Stock prices will rise. You don't have to be Einstein to figure that out, and we're already seeing that. If you think back, and I'll show you the Eastern Young Cattle Indicator is a good one to look at, but through the drought period, it fluctuated along around the 500 cent mark, but the restockers were dragging the whole thing down. It was only the processors who maintained it at that level. As soon as the rain came and the restockers kicked in, the market took off. One of the other impacts of the recovery after a drought is that processors will struggle, and they'll struggle on two fronts. They'll struggle for supply and they'll struggle for margin. They're both connected. And what we know is that after previous droughts, it's always after the drought when a processor closes up or when they go broke. So we expect that there's going to be some rationalisation. It won't be the big guys, it'll be those small to mid-tier processors who will be under pressure. And I'll talk a little bit more about how they've made their money as we go down the track. The other thing that will happen, we think, is that crop plantings will increase. And if you're thinking about it, you know, the farmer who's been in drought, sold all his stock off, his paddock's been empty, and then he goes back to restock and sees the prices, and then he looks in the shed and sees the seeder, and he thinks, well, I've got a bit of moisture in the ground. If I put in some wheat or barley or canola, I'll get a return, you know, October, November, and prices for those commodities are pretty strong as well. So the challenge is going to be for sheep to win back those acres that they previously held. Still a little bit more into COVID-19, and the full impact is difficult. We've said that. But at some stage, the world will begin to rebuild and normalise. It'd be nice if we knew how far that was, but you know, I don't think anybody's got any idea about that at the moment. But there's no doubt there will be immediate negatives, and they could last for some time. In terms of red meat, a global recession is clearly bad for customers. One of the things that happens is that lower value cuts become more in favour. And so our commodities that are sitting at high prices are under some sort of threat. And simply because of the high prices and because of the recession that we're pretty sure is going to happen. The other thing is that in the short term, logistics, shipping and distribution, especially for our export customers, is much more difficult. But that said, we look to the future. One of the benefits is that we now have a much lower Aussie dollar, and all other things being equal, every 10 cents if you talk about cattle, every 10 cents movement in the Aussie dollar is worth 40 cents on the Eastern Young Cattle Indicator. So we're certainly going to see a lower dollar. And if you think back to some of the previous big global issues where the Aussie dollar gets belted because it's seen as a commodity dollar, but at the same time, we've had China being a strong customer through those periods. Our commodities and our exports and our mining and our agriculture hasn't fared too badly. We've seen in the past where there's been a bit of a turn down, but generally it recovers pretty quickly. At the end of one thing that doesn't change is that red meat protein is still in short supply. And even though there might be changes in the cuts that are being purchased, there's still a demand for red meat protein because of the African swine fever. And the other thing is that restocking will continue in Australia. We could even see the Eastern Young Cattle Indicator pull back to somewhere closer to 500 cents, and there will still be a strong demand for restocking in Australia, because returns at these levels are still good. And of course, the season is much better than what we saw. Jane, are we going okay? I just wanted to check that we're going okay. We haven't had any questions? Or?
No, Rob, no questions yet. So yeah, we'll just remind people, if you've got any questions, to push the chat button and type away, and we'll read those out for you.
Thanks, Jane. And we're also happy to be interrupted. It gives me a chance to make sure I'm not just talking to myself here. A couple of things to think about with beef. Australia makes up 20% of Chinese imports. And when they talked about the US-China favourable trade deal, it was coming, in terms of beef, the US only makes up less than 1% of China imports. So they're not a big player in that area. They also had traceability and HGP issues. There's also the preference for grass-fed, which is a very difficult product to source out of the US. And they also made a very clear statement that even though they were going to favour the US, it must be at competitive prices. So you weren't going to see somebody frozen out of it based on price. They would have to compete with the price. So that would be a positive impact on all the industry. Just in terms of lamb and mutton and going forward, we still think the strong recent demand will sustain it. The short-term impacts of COVID-19 are yet to be determined, but the strong recent demand, and I'll show you a chart in a minute that really emphasises that. And we'll talk a little bit more about the New Zealand flock that's still contracting further on. In terms of the China-US deal, one of the things that we're concerned about is that the US had a high tariff on finished product out of China into the US, and that was certainly dampening down the profitability of the processors in China, so that was flowing through. But the bottom line is that despite the recent pass-in rates, we've got low stocks, and we know we've got low supply in the mills in China. So we think pre and post the COVID-19 issue, demand is generally solid. There's no doubt that wool gets interrupted with logistics when that gets mucked up, or when people can't come to the mills, but it might be interesting. We've quite often complained about the fact that we're so reliant on China for our wool processing. If they are able to manage and deal with this COVID-19 because they're an authoritarian government better than anyone else, we may be grateful that we have got them. The only other thing is that in a recession, wool doesn't fare well, and it's because it's a discretionary spend. So people can choose to buy wool or not. And if we're in a severe recession, then wool's going to get hit by that. So summing up in the impact of COVID-19, and this is all, I guess it all is dependent on how bad things go. But in a reasonable situation, we're going to see that the red meat has got more positives than negatives. And in the end, those positives will weigh and support the market. Now, we can't talk about what will happen in the next 2 or 3 weeks here in Australia, where maybe our markets collapse. But by and large, we're going to see that in any recovery after this, that the shortage of red meat supply is still going to be a factor. Wool's at risk, and so are the other small commodities, the niche commodities. We've already seen that, and dairy is not something that fares well in recessions in the past. So we've got a question mark over that. Not saying we know a lot about it. Here's something that we've been banging on about for a while. The female slaughter levels are are unsustainable at these levels. So last year, we slaughtered, of all the cattle slaughtered, 56% were females. Now, to put that in perspective, that means the herd is decreasing. If the herd is to remain stable, so it doesn't decrease, doesn't increase, then our slaughter rate is 47%. So we think that in a herd rebuild, the female slaughter rate will drop down to 43% because it will become more attractive to take those animals back onto the farm, or in fact, we'll see people keeping more females in their breeding herd. So what happened after 2014-15 was that we started to rebuild the herd. It went okay in 2017, 2018, 2019 was when the wheels fell off. And in 2020, we're going to see this record low herd of around 24.5 million cattle. This little chart here is a really good illustrator of how severe the female cattle slaughter ratio has been. So remembering that on average, 47% is where the cattle herd remains stable. And so over the last 10-year period, that's our average female slaughter rate, and the grey is the range of where each year has been. So in 2014, which was a pretty bad drought, it was at the top end of the range. 2018, at the top end of the range, and 2019, it went into overdrive. And partly the reason for that was not that the 2019 year was any worse than 2014 or significantly more severe, but it was attractive to sell beef because the prices held up so well. In January of this year, the slaughter rate of females is still sitting above 52%. So until we haven't seen the February figures yet, but at least in January, we were still pushing high in a destocking phase, which was a little bit surprising to us. Now, we think we'll see it come down. It'll come down and we'll sit somewhere in this low area here. So it's going to support prices. It's going to mean that the demand is for people to restock, and that will have a knock-on effect. One of the areas that has a knock-on effect is the feedlots. Quite often have been feeding cattle now for Coles and Woolies, the domestic fed cattle. They're on for about 60 or 70 days on feed. In the last couple of years, there's been a lot of heifers go through that program because the heifers have been getting sold off because of the drought. They feed up well. That supply will drop away. So that's what I mean by there'll be a knock-on effect into other areas where the steers will start to benefit from that because you'll have more competition for less stock. The main reason that the markets kick up is meat prices. And so we like to look at the 90CL. So a 90CL is really just a hamburger mince. The reason it's important is that most of our 90CL product goes to the US, and of course the US are one of our bigger competitors in our premium markets of Japan and Korea. So the 90CL is a good litmus test or a good bellwether for what's happening in prices. So what we saw in 2014 was that the 90CL started to rise dramatically. And because we had a drought supply and a high female slaughter, our cattle prices didn't. But as soon as that pressure went off with the female slaughter went off, up went our prices. And then they tracked along for quite some time. This last drought we've been, I'm sorry, I'm putting my cursor on the wrong screen here. This is the drought that we've just been in, where the market sitting around the 500 cents. Remembering back in 2013-14, it was sitting just above 300 cents or thereabouts. But the meat price started to take off again. And it started to take off because of this demand and this building demand. And then we've had, so once it rained, there's our Eastern Young Cattle Indicator. At this point here, very little restocker activity. At this point here, it's been driven almost exclusively by restocker activity. And what we've had now is that the prices have crossed over, which is a bit of a warning. It tells us that now our cattle market is a bit dearer than the meat market. And that's why we're saying that the processors will start to feel some real pain. Lambs, I love putting this chart up. It's like the old song, Stairway to Heaven almost. What we've seen since 2013 is higher highs and higher lows, year on year almost. And it's an incredible story. And I'm not sure who's responsible for it, to be honest. But people are certainly discovering, it's export market driven, of course, but people are certainly discovering that lamb is a great product. And the other thing is they're discovering that mutton is a great product. And what we'll see in the future, because of this demand for mutton that's been built, we'll see mutton prices sit closer to lamb than we've ever seen before. Lamb strong, mutton stronger. So it's interesting that all this extra supply has come at a time when the Australian sheep flock has been in decline. We've got the lowest sheep flock in 100 years, or just over 100 years, and yet we've been able to grow lamb supply. And that's the story for the wool industry. The wool industry is the one that's given that up. And it's interesting that the people who have gone into prime lambs, I'm not saying that they've done any better than people in the wool industry, but they certainly didn't make a mistake. And it's a credit to the industry that despite the drought and the reduction in sheep numbers, lamb and mutton exports have remained strong. If you keep a memory of that chart there, and then have a look at this one, this is the demand that came out of China. So Australian lamb exports to China, it really started to turbocharge and kick in from about 2011 onwards. China has been strong, and as we said, it's competing at these high prices. It looks good for the future. So the wool market is quite fragile though, and it's certainly a valuable byproduct of any sheep meat enterprise, and for the merino producers, it's a wonderful product, and wool producers have benefited tremendously since the market started to lift up through 1,000 cents. But remember, and the top part of the chart there is the Eastern Market Indicator in Aussie dollars. And if you look back through this period here, when we had the dollar at almost parity, our customers were paying the same price as what our growers were getting in their own currency. Now that's diverged now as the dollar's weakened. And you'll see here, even though in the last, since 2018, the market has declined. But it's declined quicker in US dollar terms than it has in Aussie dollar terms, because the currency has declined at the same time. So that's been a bit of a cushion for us. The concern though is that we're continually producing less, and there's a reason for that. I mean, the first reason was that people didn't like the price of wool, and then we had the droughts. But this year we're 6,000 bales a week down on our clearance year on year, and that's on top of about 7,000 bales a week for the season compared to 2017, 2018. Now the market has been helped by the falling supply. There's no doubt that the demand is weaker. And we have for some time been concerned that the falling supply is a serious problem for the long-term viability of the Australian wool market. So supply needs to turn around, and post-drought, the challenge for wool is to get its fair share of the available acres. And the challenge is real, because cropping and prime land production is prepared to have a real crack at increasing. And if you talk to grain growers, their strategy is to increase crop acres by impacting on sheep area again, continue to take away sheep area. Now, grower stocks are building as we pass in a bit of wool. It's not significant in comparison to where we've been with stocks before, but it is starting to build. The question, I guess, is will falling supply and growers' preparedness to pass in wool if they don't like the price, will it offset the risk to price? I'm not sure. We did comment in last year when the market started to soften a little bit, and growers passed in wool. The pass-in rates went up to 20%, 30% at some stage. It seemed to support the market. You know, buyers missed out, so next week they came back and the market went up again. Long term, that hasn't been a strategy that's worked for the wool industry, so we remain sceptical whether it can happen in the future. We shouldn't be too critical of wool though, because prices for all fibres have been declining since 2017. If I can just highlight a couple here, you've got, remembering we've got US cents a kilo on this side for all the other products, and we've got US cents a kilo for Australian wool on this side. So Australian wool had been declining, and just in the last, this is last week's fall, if you can believe it. Now it's rallied a little bit this week, but that's quite dramatic. The other one that's taken a fairly severe downturn in recent times is cotton. You can see cotton sitting in there in the purple, but everything else is coming back as well. So in 2020, this year, wool and cotton are both down 26 and 28% on a monthly average, respectively. And since January, we've seen merino wool down. You can see there, merino wool down, I just said that, and cotton. However, polyester and acrylic are also down, but they haven't been hit to the same degree as the natural fibres. People who follow us a bit will know that we love following sheep offtake. We think it's a good leading indicator as to what supply is going to be like and what joinings are going to be, and therefore what lambs are going to be available each year. Since 1990, we've had the flock in decline. And the reason it's been in decline is because this green line here. When this green line is, and it's the sheep offtake, is above 12%, the flock declines. So since 1990, there's been a couple of short periods where the offtake has been below 12%, but it hasn't lasted long because the droughts come back in and pushed it around again. And that's pushed our flock down to where we'll be somewhere like 63 million by June this year, according to MLA. So the message there is that more than 12% offtake and the flock declines, less than 12% offtake and the flock increases. Interestingly, if we look at New Zealand, the same model applies, or pretty much applies. The only difference is that they started declining their sheep in the 80s, when dairy became, the big driver of New Zealand. And it's interesting that their lamb offtake is directly related to their sheep numbers because of the high numbers of crossbred sheep over there and the fewer merinos, whereas ours are a little bit more cushioned here. But what it means, and the reason it's important, is that Australia and New Zealand are the only two countries with really any serious amount to export lamb and mutton and satisfy some of this demand. So one of the things, if I just go back to the Australian chart, there's no alternative to the fact that ewes will need to be retained if we're going to build numbers. So that means restockers will have to more than match the demand for mutton, and we saw where the mutton price is. So the recent flock decline has resulted in ewe sales making up most of the mutton slaughtered. And this bodes for a clash between restockers and processors. It's not a problem if you're selling sheep, but a difficult situation for buyers, whether they're sourcing for slaughter or for breeding. So despite all these positive stories for sheep meat and wool, we're at a record low numbers for the flock, which is just quite mesmerising. So there are many challenges when we try to build up a flock, especially from these record low levels. It's probably easy to add 1 million sheep when you're starting from 100 million. It's much more difficult to do it when you're starting from 60 million. And we can look at it from two sides. There are those who have destocked as a result of the drought. They'll need to be innovative and adopt a long-term plan to get back to sheep. And it can be done. You know, there's some really good programs about how you can maximise your breeding program. There's good genetics around now, but it will take a long, slow process. And my hope, especially for the wool industry, but also for the lamb and mutton industry, is that those farmers that are coming back that have been severely impacted by drought introduce some sheep back into the flock alongside what we think will be a big cropping program, and then build on that, because the advantages are there for running a mixed enterprise. There's no doubt about that. But also we think that the value to the business is going to be there in the future. For those who weren't, fortunately, not severely impacted, they've now got the opportunity and possibly, if we want to take a holistic view of this, also the responsibility to make the most of this situation. You know, build the resilience in the business, make sure that we're in a position where when things turn around again, that we can maintain the sheep and that we can grow the sheep flock in times of good times. So either scenario will require the efficient use of productive ewes. However, the unique circumstances outlined will result in the ewe valued as never before. And by extension, productive ewes or cows will be valued as a premium animal on top of the high general value of the stock. So while the historically low herd and flock, with a historically low herd and flock, this situation is likely to hang around for some time. As I said, building the flock by 1 million is easy. If you start with 100 million, building off a base of 60 million is more problematic. New Zealand, we talked about, they're not going to be a serious threat at all, because once properties turn to dairy, they don't go back. So sheep numbers in New Zealand peaked in 1982 at 70 million. However, today they're closer to 25 million. So the market outlook, taking on board all the things we've talked about, and with the proviso that we really don't know how nasty this downturn or this recession is going to be as a result of COVID-19. By and large, the weight is that beef and lamb and mutton is going to come out when things do return to some sort of normality, is going to come out of it flying, simply on the supply and the demand for red meat protein. We're giving wool a tick as well. And the reason we're giving wool a tick is that it's just the sheer weight of, or sheer lack of weight, if you like. There's a lack of numbers that are available. We really are struggling to maintain the wool clip as it is. As I said, we're 7,000 bales a week. Last year we were down on the year before. We're down on the 6,000 bales a week this year. So, barring a complete collapse of all processing in the world, wool's going to be okay. The question mark will be for grain, I think. And the reason I say that is that we've had 2 years of high Australian prices because of the drought at a time when the world is awash with grain. Now that may change coming out of this, and it's probably not the night to be talking about grain too much, but the thing for grain is that the best thing that can happen is a good season. Production trumps price every time in most commodities, and that's certainly the case of grain farmers. It wasn't much fun seeing wheat at $400 a tonne when you're in drought. Excuse me. It's certainly a much more enjoyable exercise when you're getting somewhere between $250 and $300 a tonne for wheat, and you're filling the silos and the trucks are busy.
We have our first question, Rob.
Good.
The question is, why do increasing stock prices lead to rationalisation of small to medium-sized meat processors, and what are the implications for red meat producers?
Yeah, so it's a good question. It's something we should be aware of. So we run for those who follow Mecardo will know that we created a theoretical processor margin. So how much money, and we just do it for cattle. It's more complicated trying to do it for sheep and lambs, but we do it for cattle. And it gives us a bit of insight, because what we did, first of all, was we took all the meat cuts and the offal and the hides and all the co-products, and we put a value on them. And we monitor the value of all those individual cuts, and we reconstruct it back to the animal. So we know that there's a certain amount of meat and meat value coming out of the animal. And then we add a cost of processing, and then we add the cost of the animal on the hoof. And that tells us the difference in between all that is the margin. And what we found out was that when there's a drought, and the female slaughter rate goes up, and the percentage of females being slaughtered, whether it's mutton or cow beef, the margin goes up dramatically. Processors make a lot of money. But the flip side to it is that when the drought breaks, that source of margin, which sometimes compensates for some of their other more, we did a report for, I think it was Meat and Livestock Australia, and one of the messages we got from processors was, they said, this is a cents and pennies business. And by and large, they're right. They make small margins usually on throughput. So the idea is that you have to keep throughput. So when throughput goes up, your margin improves. When throughput goes down, your margin disappears or contracts, and in some cases goes to negative. So the question also said, what does it mean for us? It's a good question. I subscribe to the theory, rightly or wrongly, that economics means you have to be efficient, and part of efficiency is having scale. Now, if we've got a contracting herd and a contracting sheep flock, it's more difficult for more processors to remain, have the scale to remain profitable. So I don't think it means a lot, to be honest. I mean, the question about competition is not, I think there are other issues that impact on competition rather than how many meatworks we've got. What I'd rather see is large, profitable meatworks rather than having, a heap of small, unprofitable meatworks, because those guys won't be helping support prices either. I did say to you, Jane, that you should make me keep my answers short.
That's okay.
Let me just summarise, and then we can take some more questions if that's okay. So that's our story tonight for red meat from Mecardo. We don't always expect that we're going to be right. So things come out of left field all the time, and don't we all know it? What we can say is that our outlook is based on data. We add our experience and knowledge to provide insights for our customers, and we apply this to their selling and buying decisions and their longer-term price strategy. So if you want to access more from Mecardo, I suggest the first thing to do is just follow us a bit. We've got a team of people here who love getting on Twitter. We put up a podcast. We've done podcasts on a number of topics. Some are better than others, I think, but we're called Commodity Conversations, and I think you'll find that generally they're of interest. So can I finish by just saying I wish you all the best in, hopefully, first of all, an extended post-drought period. I wish you all the best for the rest of the challenges that we're facing. But remember that in the future, if you're breeding sheep and cattle, then the value of using cows will be even more esteemed, more important, and have greater impact than ever before, especially if we're to grow the industry and take the opportunity of a lifetime. If you think Mecardo can assist you in any of these roles, please give us a call. Jane, that's the end of my presentation, but I'm very happy to take some questions.
Thank you, Rob. I'll just remind everyone who's online that if you just roll your mouse down to the bottom of the screen, you'll see the chat bubble and you can type a question in there. But I have another couple that are coming through. Rob, where is the US-China trade issue at the moment, and what will happen with the addition of the COVID-19 black swan event?
Yeah. So first of all, the US-China trade deal, it was a big deal. But we actually did quite a bit of work on it when it came out to figure out what impact it would have on Australia. And we said, well, not directly anything on wool, except that it may mean that some tariffs from out of China, out of finished products, decrease, because not many people realise, but I think in October, when Trump and China were having that tit for tat, they whacked on I think it was a 20% tariff on top of the on wool garments, and that really hurt the processors. So we don't think wool's going to be impacted negatively. We think it could be positive. We don't think that sheep and lamb is going to be impacted at all. I mean, the US doesn't operate in those markets, but that demand for red meat protein and the strong trajectory that lamb has into China, lamb and mutton has, would override any possible negatives. And as I said with beef, the US just doesn't have the surplus beef to go and attack that market. Remembering that, and I did mention this, one of the things that was in the fine print or when you read through the documents was that any agreement to increase exports out of the US had to be on commercial terms. It had to be on the same sort of, it couldn't have a price premium built into it. And so we don't think that there's going to be a direct hit on our beef for the China-US trade deal. Now, where is it at the moment? I don't know, because it's a bit like African swine fever. Who's heard of that in the last 3 weeks? So I think the whole thing is probably in the too hard basket right now to do anything. I think there was going to be a $23 billion increase in exports this calendar year. Well, you know, you can kiss that goodbye now with the way things are going, both in the US and China and with trade. So I don't think that's going to be a factor. In terms of COVID-19, and I did say at the beginning, you know, I'm not going to say that we know what's going to happen. I don't think anyone can say they know what's going to happen. We know it's not good. But then if we went back and had did this presentation in January, we would have said we take away the one big negative for the cattle market was the drought. And we take that away. The drought broke, and it broke spectacularly in some areas. You know, the amount of feed that grew and the change that happened and the restocking that immediately started. We'd say we'll take the negative away. And then on the horizon, we've got China-US free trade or trade agreement. Maybe some problems, but we're not seeing a lot. Oh, and then there's this other thing ticking along in the background, this COVID-19, but, you know, I don't know much about that, and we would have dismissed it. So to say now that we fast forward to March to say we've got a handle on what's happening would be kidding ourselves and everybody else. So I just don't think we can go any further than that. But I think what we need to do is watch very carefully. We had a question the other day: if I've got cattle to sell, or I've got cattle to sell in the next 3 months, what should I do? And we saw last week in the markets spiked up for supply, both in sheep and lamb and in cattle, because farmers decided, if I'm going to sell something in the next 3 months, I'll just go to cash now. I'll get the cash now. And I would say that's probably not a bad strategy. Maybe sell something and hold something back for your normal turn off in 1 month, 2 months, 3 months. But if you've got stock that are a longer term project, so breeding stock, cattle that aren't going to get sold till the end of the year, I can't say how long this COVID thing will go on. But if it does draw breath and let the other factors on the red meat industry come through, then we will see a strong demand for our product in the second half of this year and into next year.
Okay, thanks, Rob. A couple more questions. This one says, I'm a specialist lamb finisher and it starts to look shaky with lamb prices below $6. What do you think the risk if this happening next season? What do you think the risk of this happening next season is?
Yeah, well, we everything is sort of pre-COVID-19 and post-COVID. Pre-COVID-19, we were very confident that we were going to see, $7, $8, $9 kilogram prices across the year for lamb. Very confident. So am I less confident now? Well, I wouldn't say I'm less confident, but I'm shaky because I don't know how much this black swan event impact is going to be. If you're a finisher though, the question was, it was a finisher, Jane, was it?
Correct, yeah, lamb finisher.
Yeah, so I presume it's a trading enterprise. You've just got to keep watching all the time, because sometimes you can make more money out of, low lamb prices than you can out of high lamb prices because you're buying and selling. So it's an individual thing. Angus Brown, who's been doing for some time now, does a lamb trade calculator every few months. We do it we focus especially in October, when a lot of those Riverina Merino lambs, wether lambs, come on the market. And those trades have turned out to be very, very good, almost regardless of what the price of the store lamb is. You know, it's more about what happens in the market.
Okay, thanks, Rob. The final question that I have is, will there be switching of consumer behaviour if sheep meat and beef prices continue to increase? And what do you feel is the ceiling price for this, or are we in uncharted territory?
Yeah, so if red meat prices continue to rise, there certainly will be. And we're already seeing that in Australia, where the consumption of lamb or mutton is virtually non-existent. That's been around for a while, but lamb and beef consumption per capita has been declining, and partly it's probably more driven by price than anything else, if the truth be known. What gets the headlines is that people are saying, oh, everyone's going vegan and all that. But it's a pretty small demographic, that is. It's more about price, and that will continue. But the reason the price is going up is because of our export demand. People in other countries are prepared to pay more than people in Australia. And I don't see that as a bad thing. I just see that as a reality, it's an economic reality. And I mean, we could look at it and say, well, perhaps if the price was cheaper, we might be having more people looking to buy our product in Australia. That's not something that sits well with the farmer. And the other thing to remember is that I think the lesson we saw in the droughts was that it didn't necessarily bring back meat prices. Meat prices were unaffected worldwide. It was the livestock price that changed because of the sheer weight of numbers. And so the meat price is not being impacted by supply. It's making its own way. And even when we killed, you know, that 56% of the females in the slaughter rate, it didn't drag the price back. So I think we're coming to terms, our parents had to come to terms with the fact that we were mainly a domestic consumer of our red meat. Now we've got to come to terms with the fact that the domestic market is still a big market, but it's not driving prices. And in the future, it will have less impact on driving prices, in my opinion. It will be that export market, that export consumer. And we're talking, just go back to what I said about, you know, we've got 25 million people in Australia, I think. But the one demographic that MLA has done some work on is the millennials in China. And the reason they're interested in them is because they've got spending capacity and they've got an appetite for putting meat in their diet. So 25 million people in Australia, they've got more than 10 times that just in the millennials in China. So we're not going to have any trouble finding a home for our red meat product. And as I said before, some of these new customers have come in at a time, they haven't come in at the bottom of the market, put it that way. They've come in at a good time. So we know that the product is being valued, and we know that the product is seen as a high-end product. And so that's good.
Thanks, Rob. I don't have any other questions, so I'll hand back to Ben to wrap up.
Thank you.
Very informative as per usual. If we were in the intimate event at Launceston, I'd like to chat to you afterwards and elaborate further, but for all those who are online, I've very much enjoyed that. It's very insightful, and I really appreciate your input in regard to where things may be heading. But yes, very much uncharted waters at the moment, Rob.
And we might be coming back in 4 weeks with a whole news story of the way things are going, but thank you. I enjoy your groups, and I encourage anybody to reach out if they've got some specific information they'd like from us. Thank you.
Excellent. Thanks again, Rob. Signing off there. As said, this will be available via the website, the Pro Advice website at some stage. So safe and happy evening, everybody. Good night.
Good night.